Would you like to know when they form? Give me a number 1 with a plus symbol after it. If you would like to hear me tell you in the next 5 minutes when to anticipate smart money divergence. SMT, smart money tool, smart money technique. I never settled in on a name on it. I can't see your posts because I'm walking around the house. So I'm hearing some things blinking and blipping in the background. So I'm assuming that you probably are doing that now. When you see a market move into a macro, now a macro is me showing you how it's been codified, coded, scripted to run for inefficiency or liquidity. That's what that 20-minute interval every single hour, it does this. Now, if you understand that that is where price is going to seek to jump to reach for, to draw towards, move in the direction of a obvious inefficiency above or below the market, or an obvious relative equal high or low, or a singular high or low, like a London session high or a London session low. Sometimes they're not always a relative equal low or relative equal high. In London session, that one we treat a little bit differently because it can be a singular high, not relative equal highs. So a SMT divergence will form usually just before the delivery from a macro. So in other words, you're going to get that price run high. Like imagine for a moment, the market's been rallying and it goes up, creates a short-term high, and it trades off. And we'll say we're watching the NQ, NASDAQ. And then some period of time, and I'll leave that up to the time frame you're looking at, because this forms on every time frame. And then it rallies up and makes a slightly higher high than the previous high in NASDAQ as we approach the beginning of a macro time. It can happen inside of a macro time. If it does, then it's super fucking star. It's gonna rock. It's gonna be a rock star performance because you got best of both worlds right there at the same time. But usually SMT will form just before a macro, and that stop hunt is the damage that frees the market to deliver under the basis of that macro time. Because remember, the macro is where all traffic is removed. It's like when air traffic control says, okay, we cleared airspace, you have the right to have a safe landing here on runway so-and-so. That's what a macro is. It's air traffic control to allow all things get the fuck out of the way. Now we're going to the liquidity or the inefficiency above or below the marketplace. The SMT divergence is the damage before that's permitted. So Larry Williams did not fucking teach that. He doesn't even believe the things, like he thinks that there's no them against us. And that's where we defer. Like that was the separation point with me, because I love him to death. I'm so thankful. I've encouraged you last week. You look at a 15-second chart. Look for relative equal highs and relative equal lows, because if you study them on a 15-second chart, you're going to watch how the market goes back and forth and bangs them, back and forth, bangs them, bang and bang. And you can literally sit there all day long and trade a 15-second chart, and everybody else calls it noise, but it's just literally like just anything else. The time frame is very short. You got to be nimble, and you can learn a lot by tape reading a 15-second chart, even if you can't trade the lower time frames. So many people are they're just adamant about, no, I need you to start teaching me on a 4-hour chart, daily chart, or weekly chart, or I'm not interested. Then get the fuck out of here, because you're literally that guy coming to the Jade Master saying, I'm not learning anything. When the 15 seconds doing every fucking thing that a weekly chart, a monthly chart, a quarterly chart, a yearly chart, 5-year chart, doesn't matter what the fuck it is, it's price. But you're getting so many wonderful examples that repeat inside of just a 1-hour chart. 15 seconds is a lot of opportunity to see it banging around and take relative equal highs and relative equal lows, and noticing the time that it forms these things. And I promise you a revelation in that, because you will see how one of the most used high frequency trading algorithms operates in the marketplace every single day, buying and selling all day long. You see it clearly on a 15-second chart, 30-second for some of the more significant price runs, but the real detail, you'll see it in a 15-second. And I don't want you to take my word for it. I want you to go out there and spend some time delving into that, and you will find what you realize after seeing it That's what goes on behind the scenes. It's they're running the price on a scripted basis, and it's on time. If it's not ran by time, you're going to have a random distribution of when relative equal highs and lows are being taken out. But you're not going to see that. You're going to see that they happen at a conformed window of time. Now, right away, that's toxic to some of you. Like, no, you should just tell me what it is. No, no, I shouldn't. I shouldn't be telling you any of this stuff. If we're being honest, you're not entitled to this stuff. But you have a wonderful revelation if you do that. I'll share with you 15-second charts for the people that don't have that chart. I'll share the morning session to the guys of a 15-second chart next week, this starting this week. And that way you can look through the chart and study it. And you'll see it. You'll note it. And once you get that, the whole idea of this market being scripted or there is no central algorithm, you're a full of shit, man. What I learned from George Angel was the day was divided because this guy was a floor trader. The ebb and flow of what the market was doing, how these rushes of volume coming in, that's what made floor traders profitable. They could see the orders coming in. They could watch this massive shift where, man, there's a lot of buying. There's a lot of buying. And they all knew where the whale accounts were. And when these big whale accounts would start buying, what are they going to do? They're going to dogpile on top of it. They only need a little bit, but a little bit in their hands down there in the pits, you could be making millions of dollars in a month. But trading, because of patterns and shit, that's not what they were doing. They didn't have the luxury of having charts. They're standing down there in the pits, listening to these people rage about being short or being long, getting in and getting out. So they just dogpiled. That's all floor trading was. Yes, they had the pivot numbers. They knew that it was likely going to gravitate to that level down there. But really what they were watching was the order flow that was literally in their fucking hands. Ticket runners running down to the pit screaming, I got an order. I got an order. This is what I got. This is how many contracts. And they start ripping it across. They're hollering it out there. Some of you 20-years don't even know what the fuck that means. You have no idea what the fuck you're talking about half the time, let alone how these markets booked before they were electronic. I have floor traders, very successful floor traders, that were in my fucking mentorship that paid to learn from me because they couldn't do shit when they left the pit. Couldn't transition, couldn't do it.